What's going on? How we doing? So I've had a lot of requests for a technical analysis on AMC as well as GameStop and a few others. I will be tapping into some other picks to try and further education, just try and help those who are curious about markets try and tap into what is the stock market. There's a lot of noise in this space, and I'm not here to sell you on a course. I'm not here to sell you on any bullshit. This is just straight up what I've learned over the past oh so wise 9 months of being a part of this shit charade. There's a lot going on the screen. We're going to disregard a lot of it. We're going to just look at this from a strictly visual, uninterrupted perspective and try to just take a look at what the stock is doing and try to put ourselves in the shoes of what other traders would be thinking. I'm also trying to step away from the cycle theory perspective of things to try and really have a pure approach to this as if it were a traditionally traded stock that doesn't have tons of manipulation going on. But that's neither here nor there. So I'm going to dive right into it and walk through this thing. So for some reason, I can't get the VWAP candles to not be a part of this. VWAP stands for volume weighted average price. It's something that I feel like is really underrated, but I'll get to that later. This is the daily chart going back to about late November of 2020. And whenever I'm looking at a stock, I like to just put myself in the shoes of what has this thing done historically? What are other people looking for? Where do you typically find certain motifs to come out and show themselves, be it bearish or bullish, and just try to really ascertain what other people are thinking, because ultimately, despite the stock market supposed to being, as much as the stock market is supposed to be a very fundamental approach where people are looking for, what are the fundamental plays? Are we set up for this technical setup that would adhere to fundamentals or this, that, or whatever? As much as that is supposed to be withheld throughout trading, it is actually the last thing to ever be fucking considered. So nonetheless, people are trading off of just prior trends typically. And if they aren't trading off prior trends with enough money to put a dent in the chart, then they know something that you don't. Plain and simple. So in general, though, again, trying to step away from the cycle approach of things, I can see that obviously there's a lot of very parabolic and volatile movements with typically some form of consolidation afterwards where the thing will go sideways and just trade up and up through each level to ultimately create, some equilibrium between the upward movement that had a ton of velocity to then seek an equilibrium of some sort where it trades sideways and gradually trades back up to where it was to then break out. I can see this right here is a cup and handle. This was a giant cup and handle. This was a giant cup and handle. All in retrospect, though. So I have an idea of what this thing does, what the theme of the stock is, what it tends to do. I'm now zoomed in on what is mid-May going into present. I've already put together some supports and resistances, being denoted as the cyan lines and the pinkish lines, respectively. Supports and resistances are what they sound to be. It's where the stock likes to bounce from or where the stock likes to get rejected from, also respectively. So I'm going to take a look at this, get my feel for it. Obviously, there's not enough granularity here on the chart for me to really take away anything significant. So I'm going to go to the 2-hour time frame. And this is where I can actually get some real substance as to what the stock is doing relative to the time frame that I'm looking at. So again, if we zoom in, we can sort of see where the supports and resistances start to make headway. I can also see where new ones have formed. So I'm going to go ahead and put a little trend line here to denote where we're at currently. We do have what appears to be what people would call a head and shoulders that's forming right here. Here's your shoulder, neckline, head, neckline, shoulder. And then people will either typically expect it to bottom out here or even have a retracement back down to some proportion of where the initial movement started. Based on my experience with the stock, you typically see it slightly bottom out. It'll dip a little bit lower. I'll denote that with a support / resistance line here. I'm going to say that it would fall just shy. This is the 43.24-ish range, so call it 43.50. And then I'm going to change the color of this just so it has a little bit of a different impression. The entire thing about technical analysis is trying to guess what other people are thinking before it happens. If people are expecting a bullish movement, then you want to use that to your advantage. If they're waiting for the dip to happen to then buy it, then you want to be a step ahead, because that's what Wall Street's doing ultimately in this, is they're waiting to see what the flow is relative to what retail is doing. So I would expect it to do something similar to this, where it might stair step down and then creep just below this line that we're talking about and then shoot back up in some sort of fashion. Relative to the rest of the trend, you can see that we have what's known as an accumulation zone. I've coined it as suffocation periods. Ultimately, though, what this means is that if you're familiar with Wyckoff method, you'll be familiar with this type of pattern where you'll have the consolidation, the sideways trading, the this, that, or whatever's, call it what you will. Ultimately, what it is, though, is it's back and forth action going on between the bulls and the bears. Now, if there is equilibrium and pressure going on here, such that the thing can just trade sideways at some relative level, such that if the bearish movement is equal to that of the bullish movement, such that on the chart it shows itself going sideways. That's ultimately what a conflict is when you have two forces opposing each other, but if they depict themselves as going sideways on a chart, that means that you have equal forces going back and forth. Eventually, one of these has to take the other out, though. And when you frame it that way and consider what would happen if you have a bunch of people who are trying to short it, but you also have a bunch of people who are trying to go long on it, and when the eventual conclusion of this war propagates, however much you had shorting this thing, right? However much you had shorting this thing is eventually going to have to be bought back, because when the thing goes up, when the stock goes up, shorts are now losing on whatever positions they had opened here throughout this period. So that would result in a very upward motion, because if shorts are closing their positions, that means they're buying. Just as like if you're a long and you close your position to avoid any more loss, you're selling. And there are two inverses going back and forth. Right now, there is a very beautiful formation we see going on here where we're holding this trend line upward. And so you're also going to notice that this is where the accumulation zone terminology comes from. And this is where you see the cascading effect of when either side is closing their position. You'll start to see some explosive movement upward. And again, that's because you had people going back and forth where they're just, for as much as someone is shorting, someone is buying that short. Eventually, when there's a catalyst of some sort, be it some fundamental news or just something on the chart, like a MACD crosses over, or RSI enters into a very bullish territory, you'll then see an explosive upward movement. And we already saw it at this level. And again, this is stepping away from cycle theory. This is in the lens of the TA purist, so to speak. So we saw what appears to be a lot of closing of positions right here. If I pull up my volume indicators as well as my volume profile. Whoops. So this right here, what I just added to the chart, is what's known as a volume profile, or a market profile, some people will call it. And it basically just denotes how much volume was exchanged at different levels of the price movements. So anything that is highlighted in yellow is a very contentious point. There was a lot that went on there. Ultimately, when it comes to TA, for me, volume spells it all. There's a trader that I follow on Twitter. Forgive me, I really want to get his name in here. I'll see if I can find the profile after this. But gave a brilliant explanation as to why volume is ultimately more important than what you see on a price chart, which I'll segue into another indicator that really sheds light onto this. But if volume is taking place at unordinary levels, that typically means that there is something that someone else knows that you don't. If you have an outlier in your volume, which means that there's more buying or more selling than usual, that means that there's something brewing, that somebody with big enough balls and big enough money can actually make their presence known on the chart. That only happens with volume, though, because price isn't typically indicative of what is truly going on your chart level. Volume does, however, because price is only dependent on who's willing to sell and buy at what price, whereas volume is who is willing to sell and buy at a particular threshold, a particular, there's something that is known where there is enough demand or enough supply to make itself known, whereas price is more arbitrary than that. There's more noise to it. So anywho, so what I'm seeing is that we have this Wyckoff accumulation area, right? And if you continue to really consider this accumulation zone philosophy, you can start to see a particular pattern that forms from this alone, where each level of support and resistance is actually corresponding to what is becoming, in retrospect, a bunch of accumulation zones. So you would expect to see something along the lines of, we know that this accumulation zone right here was corresponding to all the way back here on early July, right? Well, if we continue going throughout this pattern, where we can see that, I'm trying to stay away from the cycle theory, because I already see, like, this whole entire area right here just looks like a reversal of itself, a self-consuming cycle. Nonetheless, though, you can see how each of these supports and resistances ultimately correspond back to a prior zone of immense selling. And until it propagates on the chart, you can't quite say with certainty, but it instantly, to me, looks like just this self-fulfilling prophecy of what is a Wyckoff accumulation zone. I would expect to see this pattern continue to play out. The only problem is, if I pull up, actually, no, the market profile tells me right here, with the majority of the price action happening around the 4650 area, albeit it's a little lopsided just because of when I look over here, how long it took to send it down to this area right here. You're seeing about triple that in time occurring over here to complete that accumulation and to send it back up, which is just very odd to me. Nonetheless, though, looking back and considering our historical motifs, you can kind of see how that plays out. It makes sense, but I still like to continue with caution whenever I'm trying to apply that retrospective lens of, is this accumulation or is this just some spontaneous movement of some sort? Now what I'm going to do is I'm going to pull up some more indicators. It's going to look scary. It's going to look like there's a lot going on. I'm going to clean it up such that it makes a little bit more sense and try and go into what's actually going on. Information is only as good as that who is interpreting it. And if there's too much going on, it's just noise. You could have, this is the thing about indicators, and the thing that I feel a lot of people misconstrue. There's tons of things, there's tons of information, there's tons of signals, and all these different metrics and ways to aggregate data, and if I correlate RSI to MACD, or if I look at the on-balance volume or the ADX to this and that, it's like, okay, but what are you deriving that isn't filled with noise? Because just because I play Full in the Rain by Zeppelin against War Pigs by Sabbath, and I hear a little bit of harmony for only 10 seconds, okay, still two great songs, but when I put them together, there's just pure dissonance. And that's what happens a lot with people who are constantly looking for the next best indicator or the next best, option service or this or that. It's a lot of it becomes noise when you can't filter it and really just parse it for what it's trying to tell you, because you're too busy trying to find the answers to the stock market. It's truly just, of the information that you're obtaining through all these indicators, how can you apply your wisdom to it and ultimately create a clear understanding of what's going on? Because yes, you can have all these amazing indicators that could literally fucking trade for you, but when it comes down to making your own decisions and formulating the actual conviction that you need to open a position in something, whether it's AMC or the SPY, I don't care. When it comes down to formulating that conviction and your approach to your position, if it's just based off of indicators and no wisdom involved, then you're not going to have a very solid foundation for yourself, because too many people jump into a trade or pull out of a trade with less conviction than that of what initially got them in or out of it. And it's sad to see, because what that means is that you're letting your emotions take control of the trade rather than the numbers and what's actually going on. And so you'll typically find people who are just jumping in and out because they're too afraid of going another % in the red, or they're too greedy and they want to pull out too soon, or rather too late. That's where indicators lose their value and start to hurt you rather than benefit you. So you need to have a clear conviction built off of data, and then use that data for the better. Don't let it rule your emotions, though. But I digress. Shit. So I got a few things going on here. This top indicator right here is the MACD, which stands for the moving average convergence, and deconvergence, I believe, is the last letter of that. But essentially what you're doing is you're taking a moving average of some sort that is short term, and you're taking a moving average that is long term. And what you're deriving is you're taking the short-term sentiment against the long-term sentiment. So if I take 14 sampling periods and compare that to 28, if my 14 is the blue line and my 28 is the orange line, then if my blue line crosses over my orange line, that means that there's more demand in the short term than what has been shown in the long term. So there's more demand now recently than that of what has been proven over a longer term. And that is a message within itself. If people are demanding something more than what has been proven historically, then of course that would be a bullish signal. And vice versa, if the blue line falls below the orange line, then that means that there is less demand to be in it and more demand to get out. So as you can see, the blue line has fallen through the orange line, and you can see exactly what transpired because of that. That reference point is right here. And you can see that the thing went from 51 down to 43, right? Makes sense. But again, that's just one indicator of many. What you can then start to see is that there's a turnaround that's starting to happen. Obviously, it's bottoming out. The last time it was ever this low was going back to August 11th, which if we go back to there, we bottomed out at $30. So if that sentiment is reflecting now at the 44-ish range, and the last time we saw that was when it was at $30, that again can tell you that the sentiment regarding the stock, despite the price, could be seeing another pattern of that, where it bottoms out at this particular level, but it's at a different price. So good takeaway to have. I then want to shine some attention onto here. This is the short interest volume, or the short volume per FINRA reporting of short sales. It's pretty low, and that ties into something else, which is the cycle theory. I don't want to touch on that right now, but nonetheless, it's a good metric to have. As you can see, it's been relatively consistent. It looks like there's another wave coming. If you look at how you have a spike here and a spike here, you're going into this week being another wave of that. But what's ironic is the short volume actually is creating an uptrend every time it happens. If you look here, the short volume actually took this from $34 to $47. And right here, it took it from, call it 36 up to 47. So very interesting. Again, that's a topic for another video, and videos I've already made. And then this is the price chart. We have what's called on-balance volume down here. This is a really neat indicator. This is one of my favorites, being the volume elitist that I am. The on-balance volume indicator is, think of it as you have two buckets on top of a, what do you call it? I can't remember the term for it. What's the fucking, you play on it as a kid in the fucking, whatever. Okay, you have a balance, and then you have two buckets on both sides. One is for green candles of volume, and one is for red candles of volume. If the period that you're measuring is green in price action, you take all that volume and you drop it in the green bucket. If it's red, you drop it in the red bucket. And then the movement of that transpires onto this chart, and then we have a moving average behind that. But this can tell you if there is some form of hidden meaning behind the price action, because the stock can go down while the whale is loading up. That's typically what happens actually across every stock. There's a reason why you typically sell right before the thing goes crazy and why you buy before the thing goes down, because Jim Cramer or some other fuckwit told you to on CNBC. It's because while you're buying in, they're getting out. And while they're getting out, you're buying in. So on-balance volume is a way to see if there's accumulation occurring. If you see this going up while the price action is going down, or even just at a slight difference in degree of movement, you can typically derive if somebody's entering in, if somebody's loading up, and vice versa. If somebody is selling out while this thing is going up, then you know that somebody's getting out. They found their top, they're ready to get the fuck out. On-balance volume is a great way to parse that. And right now, it looks like somebody's starting to load up again. You saw it back here, and then you've remained stable throughout the turbulence going on the price. And finally, we have relative volume. And this is just basically trying to determine, is this amount of volume normal relative to some other period? And I think I have this set to 30 as the sampling range. But again, you see this starting to pick up. And 9 times out of 10, if this starts to pick up, you're going to see a lot of movement that then transpires from the stock. It's always been one of my favorites. It's always been a go-to. You can see how historically, like going back into the May run, you saw it top out right here. It completely blew out of the water, whatever it was referencing to. And then it even started to lead against whatever relative volume was going into that later on. You start to see the similar thing happen here. This goes into cycle theory. I'm trying to stay away from that, but neither here nor there. So anywho, now that I've told you all about my fucking TradingView setup, link in the description, by the way. They are a partner of ours on the channel. I make money if you sign up with my link. If you don't want to use my link, just go to tradingview.com, sign up, download the fucking thing. I'm a fan of transparency, so if you want to support the channel, feel free to use the link in the description. Blah, 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 blah. Like and subscribe. It's a free program. If you decide you want more indicators or more tools, you can purchase a subscription. I think the cheapest price is like $12 a month. This thing has done so many wonders for me, and I would not be the trader that I am without it. So again, link in the description if you want to support the channel. Otherwise, go to tradingview.com and download it for free. They also have an app for mobile and even a web app. So salute. So yeah, now that I've gone through my entire fucking life story on the price chart, my forecast for this relative to TA is, I want to say we're gonna go up from here. Obviously, after breaking out of what was the bottom of this current trend going back to late May, right after the run up, we've been cycling through, no pun intended, we've been cycling through these areas of accumulation and continue to build upon that. with where things stand in movements, we can see that we have what is, this is Elliott wave theory, if I recall correctly, but if I switch over to the 4-hour chart, fuck, that's a 5-hour. If I go to the 4-hour chart, we have this 1, 2, 3 movement. Excuse me. We have this 1, 2, 3 movement going on. I really want to get rid of whatever is causing. There we go. So we have this 1, 2, 3 movement going on. If I expand this a little bit, where you have a top here, you break through, and then you come down and consolidate for the prior upward movement. You have this drop down, and then you typically fling upward. This is also known as a bear trap because you're trapping bears, you're trapping shorts, and anybody who's trying to throw the thing down. And then you obviously have remnants and motifs of what has gone on in the past going on here. I like to look at things in terms of patterns and repetition and rhythm because it's something that's worked out for me for a long time, and I'm a musician and this, that, and whatever, so it kind of comes naturally. But you can also see this pattern occur on smaller time frames, these 1, 2, 3s, the drop down and then the run up. It's taking place right here on the 30-minute, but if you go back, you have the same thing. Here's your 1, your 2, your 3, come down to consolidate, and then you fling back up. I think this is just going to manifest on a larger time frame. If I go back to the 4-hour, you can then see that this entire movement from August 1st all the way to August 25th was just that, and it looks like it's repeating itself. This ties into cycle theory, but I'm trying to stray away from that. Yeah, nonetheless, though, that's kind of what I foresee. Everything after that, you know, in between these areas is just no man's land. I think that it only calls for more upward movement, given the sentiment of the stock, all of the fundamental news from Adam Aron, the CEO of AMC. There's a lot of good things coming down the pipeline from them, so I'm extremely excited for it. Even the technical analysis looks fucking fantastic, so I'm going to leave it there because this video is going on fucking 30 minutes. So other than that, thank you for your fucking time. I'm going to go, I don't know, I'm going to go do something and try to forget the fact that I just took 30 minutes to Mouty.